there's nobody in the space that thinks that Bitcoin isn't going up 6% a year.
No.
Nobody. So the issue is, do you know how much how much capital I've invested in Bitcoin at this point, Raul?
No.
$3,335,000,000.
That's pretty
Okay,
spectacular.
so one person.
Yeah.
But I didn't have $3,335,000,000 in my piggy bank when we last spoke.
Yeah.
Now, what happens if more than one person does this, Raul? How many people does it take, right? And the answer is you need public entities, and they need to be creditworthy, and they need to be able to file a registration statement. If you can file a registration statement, you can tap the fixed income markets, you can tap the convertible debt markets, you can tap the equity markets. And as you do that, that capital becomes permanent capital.
The intelligence software company MicroStrategy, spearheaded by one of Bitcoin's most vocal proponents and crypto's greatest bull, Michael Saylor, has bought Bitcoin once again. The company has bought Bitcoin through its subsidiary MicroStrategy. The news was broken by the CEO of the company and avid Bitcoin supporter, Michael Saylor. Up until now, MicroStrategy has bought a total of $190 million worth of BTC, which translates up to 4,167 Bitcoin at an average price of $45,714. Now the company owns a total of 129,218 BTC, worth almost $4 billion. Hello and welcome to Money Talks. In today's video, Raul Paul gets into an in-depth conversation with Michael Saylor, and the two share their thoughts on Bitcoin, Bitcoin mining, valuable lessons learned in the last 12 months, and how the Bitcoin space is evolving. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
So there's no doubt that offshore crypto leverage money is in the system. I think it drives volatility,
Sure.
in my opinion, more than it drives sustainability. If you want to see Bitcoin go to $10 million a coin, then it won't come from 125x or 20x offshore levered contracts and traders. It will come from insurance companies and macro hedge funds that have capital, $100 billion of capital, and they just allocate 5% of it to Bitcoin forever. And when you start getting 5% allocations forever, then you'll start to build a monetary base and a capital base that will drive the industry. So I think in general, the bullish developments of the past 12 months have been institutional adoption of Bitcoin, and that has come in the form of the companies, the Squares, the Teslas, the MicroStrategies, the Marathons, the Riots of the world that are actually in the space. I think that the second thing that I've been a big proponent of, a big cheerleader of, is if you're going to be in the Bitcoin mining business, then you're naturally long Bitcoin, and if you're naturally long Bitcoin, it's inconsistent to ever sell it. So if you're a Bitcoin miner and Bitcoin goes to zero, your business is worth zero. And if Bitcoin goes up and you sold your Bitcoin, your business is worth 20% of what it would have been worth. So if you really are a Bitcoin miner, you're long Bitcoin, which means you hodl all the Bitcoin. And so at this point, I think you see an emerging consensus in the past 12 months that if you're a Bitcoin miner, you should never sell it. What we've seen over the past 12 months is we've seen the creation of public securities. A lot of people can buy, $500 million worth of Marathon stock or $100 million worth of a Bitcoin mining stock, but they can't buy the Bitcoin.
Yeah.
They can buy the convert, they can buy the equity, they can buy the junk debt, but they can't buy the Bitcoin. And of course, people in the crypto industry, the crypto traders, they don't understand why, right? Like there's still a group of people that think, oh, well, you need to buy it and put it in cold storage and keep your keys, which is, it's what would I call it? An ideologically pure approach to the industry, which works for a subset of people. But when I'm talking to a guy that runs a $2 billion portfolio, if he went to his boss and said, I want to buy $25 million worth of Bitcoin and hold my private keys, he would get, between laughed and fired, right? Like, that's not happening in 1,000 years, no matter how hard. On the other hand, the guy can go like, okay, so yeah, this is good. So what was the interest rate again? 6%? Okay, I'll take 25 million of that. Next. He's got another deal to do the next day. So I think that what we're seeing is the maturing of the industry, the maturing of the asset class. And then I think that when the ETF comes, right now we've got ETFs in Canada, right? I don't know if you saw, Fidelity just went before the SEC. This is Fidelity. This is Fidelity for the last 60 years. They have like $10 trillion of assets under management. And there are companies that have been doing business with them for 50 years or 30 years. Fidelity goes in front of the SEC and they give a 20-page presentation on why Bitcoin is mature and why it's time to approve a Bitcoin ETP in the United States. And there's a lot of institutions that they will take $10 million chunks and $50 million chunks of this stuff once there is an ETP of sorts. And roll the clock back 18 months, none of this.
The other thing that you have championed is talking to the corporates. And it's not been as easy as we thought.
At the end of the period, you probably should market to market. And if you're up, it's an investment gain. And if you're down, it's an investment loss.
Yeah, and you've been championing this by just using the word property more, trying to anchor people on thinking of it as a digital property. Is that what you're trying to do there, to get people to start thinking of it in those terms?
I think that there's three metaphors for Bitcoin. And I think one metaphor is digital property. We're demonetizing the monetary premium in your commercial real estate, your residential real estate, your gold, your silver, your commodities. There's a lot of things that have been monetized, right? I mean, in Canada, they've got the current example where the prime minister thinks the foreigners have monetized all the houses in Canada. So they cost so much that nobody can afford a house. So in the monetary inflationary regime that we've seen for the past who knows how many years, you've seen monetary premiums flow to all sorts of other properties. It's pretty obvious. People monetize Da Vinci's and Picasso's, right? Like artwork has become monetary instruments as well. Bitcoin critics, you never hear a critic say, I spent 100 hours studying this and let me break down my 13 concerns. And you never hear a critic say, I spent 1,000 hours studying all this and I took the course and I read all the books and I listened to what Ralph said. Listened to what Saylor said. And here's my 92-point rebuttal. You never hear that. What you hear is somebody asked me what I thought and I didn't really know much. So I said, well, I don't understand it. Tulips. I don't, whatever. Quick response. So uninformed pushback. Now, investors normally take the path of least resistance. So I think the current indefinite intangible accounting treatment is an overhang. If Bitcoin would go, it'll probably go to 500,000 regardless. But if you wanted to go to 5 million a coin or 10 million a coin, right? The way you get to millions of dollars of Bitcoin is you start to market and you treat it at least at parity with holding Apple stock or Coca-Cola stock. And I think they've received briefings from institutional investors, from corporations, from other accounting firms, the like. And I'm confident at some point they'll normalize it as a financial asset. I can't tell you whether it's a this year thing or in 2 years or 3 years, but that there's no real compelling reason to treat it worse than you would treat baseball. If I bought baseball cards, Raul, it would be better accounting treatment. if I just went and I bought like a bunch of artwork and Picasso's at an auction, it would be better accounting treatment than buying Bitcoin. So irony is when the actual is the opposite of the literal. And in actuality, Bitcoin is more transparent, right, as collateral, as you've said, than blocks of stock, and certainly it's a lot more transparent than a lot of other illiquid assets, like buying timberland or a building or the like.
Coming back to MicroStrategy stacking more Bitcoin. In a detailed statement, it was revealed that Silvergate Bank has issued a $205 million term loan under its Silvergate Exchange Network leverage program to MicroStrategy LLC. As per the agreement, MicroStrategy will use the loan proceeds to purchase Bitcoins, pay fees, interest, and expenses related to the loan transaction, or for its parent company's general corporate purposes. About the partnership, Saylor commented by saying, "Gives us an opportunity to further our position as the leading public company investor in Bitcoin. As a result, Bitcoin's upward momentum has been supported by institutions buying Bitcoin, which has added to the much-needed buying pressure in the market. At the time of writing, Bitcoin traded at $46,674.09. The news of MicroStrategy buying BTC gave its trajectory a minor push as its prices went up by 1.31% on the daily chart. So what are your thoughts about Michael Saylor's big investment in the Bitcoin space? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.